Hey, this is Brett Salazar. I hope that all of you are doing well and taking care of yourselves. Over the last couple of months, I've done a number of videos regarding life insurance because I do get quite a bit of questions along those lines. So I've done videos on the different types of life insurance, the taxation of life insurance contracts, the many different uses of life insurance and so forth, and how it is so suitable for a product like that to be part of a retirement distribution strategy as well. But I want to talk a little bit deeper today about, some of the things that I have seen when it comes to life insurance death benefit. And the only, in this video that I'm doing today, the only thing I'm going to concentrate on is talking about the death benefit side of life insurance contracts. As many of you may know, life insurance is a very versatile product that you can use in many different forms. I have a number of clients that use it as a supplemental retirement plan. Other clients use it as legacy protection for themselves and their families. Other clients do it as a way to, kind of fix all the financial mistakes they've done in the past, and they want to make certain that their families do not have to carry those mistakes through eternity. So there are many different ways to do it, but there are a number of things that I have realized after 30 years of doing this, not only as a retirement strategist and a tax planner, but most important, as an insurance protection, that I think are going to be very critical for all of you to at least, get to hear and hopefully get to assimilate, internalize, and then externalize from a business perspective. The title for this short video is, I have never met a widow that did not believe in life insurance. And believe me, I've been in this industry 30 years, so I have had the opportunity to deliver a number of death benefit proceeds to the beneficiaries and the family members of clients of mine that I have done a lot of work with and for many years. More than likely in the last 30 years, I have delivered close to 20 death benefit claims. And as my clients get older, obviously those death benefit claims come in a little bit quicker than we would all hope for. But I can tell you without any type of question behind it is that I have never met a widow that did not believe in life insurance. Because what happens is when someone dies, life is going to go on. Life is going to go on for the beneficiaries. Life is going to go on for the surviving spouse. And life is going to go around them. And, obviously people are going to go to the funeral home. They're going to go to the cemetery. They're going to give their very best, and they mean to do their very best. And then as they're walking out the door, going about their lives, they're basically telling that family member, if you need anything from me, please don't forget to reach out. And they mean that very, very well. And that's what they wish that this family member would do. The challenges is that family members and survivors never do any of that. So when it comes to an insurance contract, of all the death claims that I have delivered over the last 30 years, when everyone leaves the funeral home or the cemetery, I am the one knocking on the door, bringing some value to that family. I can tell you this, I have delivered many death claims. And not only can I tell you that I've never met a widow that did not believe in life insurance, I can also tell you that no one ever, ever, ever dies at the right time. I have clients that have died in their mid 40s. I have clients that have died in their 50s and their 60s and their 70s. My oldest client died, I think it was just shy of a year ago, and he was 89 years of age. Now you would say, Bert, if no one ever dies at the right time, when would be a good time to die? Well, I guess if you have outlived your entire family and you have no more money and you're not very healthy and you're at your deathbed, I would argue that perhaps that would be the best day for you to pass on, and the best time for you to pass on. But because that's very seldom seen, the vast majority of the clients that I have delivered death claims for have not died at the right time. They had more stuff that they wish they could have done. They still have more time that they wished and thought that they were going to have. And all of a sudden they became sick, or they were involved in an accident, or they had a stroke or something along those lines. So no one ever dies at the right time, and it's important as a family to be able to do that. Now, I hear from many of you that, what can you use life insurance for from a retirement standpoint? And there are many, many different uses, as I have covered in a previous video. But, one of the main areas is Social Security protection. Because one of the things that I notice is whenever a husband and wife are collecting Social Security benefits and one passes away, the surviving spouse is going to take over the higher one of the two Social Security benefits, but then he or she is going to lose one of those benefits along those lines. And when families are used to living off about two Social Security benefits, even if one of those family members is gone, the need for that additional Social Security benefit doesn't stop at that time. It'll continue forever. So normally what happens is that the surviving spouse is not going to have any other choice but to kind of plug in that benefit that just went away and plug in that hole. And in order for them to do that, they're going to withdraw more and more money from whatever retirement accounts they have. And by doing that, it is going to accelerate that distribution rate. And more than likely, that surviving spouse is going to run out of money before he or she is going to run out of life. So you got to think very pragmatically about life insurance. And life insurance, there are two issues that are very important. Number one, think of the death benefits side of it. I'm not talking about the retirement, the tax planning, the supplemental side of, the cash values and all that. I'm just concentrating on the death benefit side. Think of it as money in escrow, and escrow closes the day you die. So the day that you walk away from this earth, that's a day that someone is going to come in and bring some value to the table. The other thing that you can consider life insurance for is that basically what you're doing when you buy a life insurance contract is you're buying dollars at a huge discount. So if I would ask you to buy Apple stock or Microsoft or any major stock that you like, and if I were to ask you if you wanted to buy it at a 97% discount rate, would you do that? Absolutely. Not only would you do that, but then you would ask me, Bert, how much of it can I buy? Because you would want to buy as much as possible. So life insurance is the same way. You're paying cents for dollars of coverage and dollars of protection. So in reality, you're buying future dollars at an enormous discount rate, which is also very important to look at when you look at insurance contracts. Now, sometimes I hear clients that tell me, Bert, I don't believe in life insurance. Well, life insurance is not a religion, so it's not something that you have to believe in. Life insurance is a financial instrument, just like any other instrument that you have in your portfolio, that if you use it properly, is going to be able to accelerate the distribution rate at a much, much higher level for the benefit of yourself and your family that without a life insurance contract, you wouldn't be able to do. It's also going to fix all those financial mistakes that I talked about at the very beginning of this video. So it's going to do a number of things for you that no other product is going to be able, like the Social Security replacement benefit that you would have, because if the person that passed away had a life insurance policy designed to replace that Social Security benefit that was going to be lost at the first death, then obviously it would give the family the ability to receive that Social Security death benefit tax-free and have the family be able to do whatever it is that they wish to do in order to maintain the standard of living in the future. So now, there's always an imbecile in the room, and believe me, I have run across many, many imbeciles. I actually wrote some notes because I wanted to kind of provide you with a list of things that I have heard when it comes to insurance planning. And whenever I do any type of planning for clients, I look at the four major things that can happen to any of you. And I call that the fatal four of retirement. The risk of dying too soon, living too long, living with a disability, and living with eroding factors like taxes, inflation, stock market volatility, interest rate volatility, and so forth. But when it comes to the risk of dying too soon, I do get feedback from certain people that I have worked with in the past that will actually make you think. So for instance, I hear sometimes, Bert, once I'm dead, I don't care anymore. Well, unless you don't love your family, you must be an imbecile. if you make a statement like that. Now, usually all these statements I'm going to walk you through, whenever I hear those statements, I shut down the video conference and we end the meeting there, because I only want to work with people that care about themselves and also care about their families and the well-being of their families, whether they're here on earth or not. So whenever I hear something, a statement as stupid and as imbecile as that, then it's time for me to move on, because there's so many people in the world that I can help. But there are not that many that I can save, because someone like that with that kind of frame of reference and frame of mind, there's nothing that you can do to save them. Another statement that I get from time is, you know, Bert, if I die, I would imagine my family's going to figure it out. Now, that's another imbecile statement, because the probability that your family's going to figure it out when you're no longer here is going to be slim to none. And your inability, you know, to die without proper coverage in place, you know, if I had the ability to do so, I would kind of bring you back from the dead and have you take a look at your family and see all the stuff that you made and all the problems that you have actually caused by not having proper protection. Because at the end of the day, you're buying future income when you're no longer here. And that's the income that your family would necessitate and would be able to use to maintain their standard of living while you're no longer here. Another statement that I get often is, you know, Bert, I don't believe in life insurance. And I talked a little bit about that, but then here's the caveat to that. You know, whenever I hear that statement, I turn around to that person and say, well, let me ask you a question. If you knew you were going to die tomorrow and you had the ability to buy life insurance today, how much would you buy? And the answer is always the same. Bert, I would, if I knew I was going to die tomorrow and I could buy life insurance today, I would buy as much as I possibly could. Then in reality, it's not that they don't believe in life insurance, they just don't believe in paying for it. So again, life insurance is not a religion, so you don't have to believe in it. But life insurance is a financial tool that is going to give you the ability to provide a systematic approach for your family to use those assets in retirement without having to run out of money before they run out of life. And that's something very, very important to consider as well. Another one that I hear is, you know what, Bert, I'll just buy life insurance. I'll just buy some term insurance for 20 years, and then after 20 years, my family can figure it out. Well, what happens in that situation, another question that I ask many of the clients that I engage for the first time is, at what time and at what place do you want to disinherit your family? And they'll say, well, I don't want to disinherit your family. And so, well, you are. Because if you buy a 20-year level term life insurance policy, what's going to happen if you're alive in year 21 and you can no longer purchase another life insurance contract because you're either too old and the cost is going to be very high, or you're uninsurable from a health standpoint? And then what? I normally hear that from a lot of my public employees that have a pension. So they would rather take the pension for themselves and then provide some death benefit in order for them to have a better lifestyle while they're alive. But then they only want to provide a certain benefit for a period of maybe 15 to 20 years, because they're hoping that by that time the family is going to be better off. And that's not usually the case. So they want to get that pension payout, which is the highest, but the pension dies in the minute that that person does. And then obviously they want to use that life insurance death benefit proceed to supplement that pension benefit. But if they die in year 21, there's no more life insurance in place and there's no more pension income coming in, because it actually died with that pension recipient. So it's important that you understand the rules of engagement, because otherwise you're going to create all kinds of havoc for your family that in many ways, you know, the road to hell is paved with a lot of good intentions, and that's not something that you wanted to do, but just by default, you would be doing that. Something else that I hear is, you know, Bert, I'm never going to experience any type of long-term care issues. And if I do, I have saved an extra bullet that I'm going to use at that point in time. And I hear that from, you know, some of my public safety employees. Because as you know, life insurance contracts nowadays provide long-term care benefits that you can use while you're alive. It's a living benefit to you. But what if you have Alzheimer's and you forgot where you put the bullet, or you forgot where you put the weapon? So what's going to happen next? So what happens is most of us think that we're invincible, that nothing's ever going to happen to us, and we're willing to take risk and pass that risk on to our families in order to alleviate any issues or concerns that we may have in the future from a risk perspective. So it's important that you do the proper planning, because if you live long enough in retirement, just about everything is going to happen to you. But you know, the death benefit is going to play a major role, whether you're alive or dead, when it comes from a financial standpoint. And then obviously, the last one that I hear is, you know, Bert, once I'm dead, my wife or my husband is probably going to remarry. And I hear that more often than not. And it's really, really sad that someone may say to me, you know, Bert, once I'm dead, I would imagine my surviving spouse is going to marry someone else. You know, can you imagine if your dad would have said that same statement to you in regards to your mom? How do you think you would have felt about your father at that point in time, or your mother if it was the other way around? See, when my parents passed away a long time ago, but when my parents they both had life insurance to protect each other. And my dad always, all he wanted to do was make sure that my mom was going to be okay. My mom, on the other hand, wanted to make certain that if anything happened to her, that my dad would be okay, and that I would take care of my dad. You know, in a situation like that, when you have a husband and wife that have been married for a long time, and one of them passes on, it creates a lot of sentimental issues and a lot of psychological issues for the surviving spouse. And if on top of that, now the surviving spouse may have to marry someone else because of financial reasons, then he or she's actually marrying someone because they have to, but not because they want to. And that would be very, very sad, because I would have never would have wanted that for either my mom or dad. And I would imagine in many ways, none of you would ever want to see that. So whenever I hear people mentioning these type of statements that I just covered with you now, to me, they're imbecile and stupid statements. So normally I don't work with those type of clients, because they don't have the foundation, they don't have the upbringing, they don't have the family values that I have, not only for myself and my family, but also for many of my clients and the clients that I deal with on an ongoing basis. Now, for those of you that have lost someone that you loved very much, and you have received a death benefit proceed, then you would be in agreement with me that I have never met a widow that did not believe in life insurance. Because although that death benefit is not going to replace a person, it's not going to replace the love, it's not going to replace the care, it's not going to replace the memories. What it will do, it will set you up financially, hopefully for the rest of your life, if you have enough death benefit. But most important, it's going to rehash all those memories, and the memories of comfort and caring and love are going to come above and beyond everything else. So for those of you that may want to have a conversation regarding, you know, how to protect your families in retirement, and how to make certain that regardless what happens to you, whether you die too young, you live too long, you live with a disability, or you live with eroding factors, so you and your family will be taken care of. Feel free to give me a call. You can reach me at area code 786-766-1042. You can also send me an email at Bert, B-E-R-T, at bertsalazar.com, BERTSALAZAR.com. And I apologize for being so relaxed today, but I had my daughter's BC shirt on, and I just wanted to spend a few minutes of the time with you. And always remember that my goal for each and every one of you and your families, by the way, is to kind of help you change the way that you see things, because when you change the way that you see things, the things that you see change. So once again, thank you so much for giving me a few minutes of your time, and I'll talk to you soon. Take care. Bye-bye.